What's good, everybody? It's John coming back at you on another video. So for this video, I wanted to do a trade recap for today, Monday, February 10th. Just because for this day, I took a trade and essentially I got taken out at break even. So initially, I wasn't even planning to do um a breakdown video for this, but it turns out that the trade ended up playing out to the T. I just got taken out at break even, so I figured that this would still be a very educational video for people out there who are interested in trading, the NAS and the S&P. So first and foremost, before I jump into any trade, I look into Forex Factory, right? And today, you have a news event for the president speaking. See, the interesting part about it is when I was here in the morning, this news event wasn't even like on the calendar. So when I was trading early this morning, this was blank. So that's the reason why I was behind the computer, ready to trade. And if we look at the rest of the week, here tomorrow we had Fed Chair Powell testifying. Me personally, I'm just going to stay away from the charts on Tuesday. And then here, Wednesday and Thursday, we have both CPI and core PPI. So with those two major news events, I also stay away from the charts. So the only two trading days that I was looking at for this week is Monday and Friday. So the next time I'll be on behind the charts actively looking for a trade is on Friday. So jumping right in, we could jump right into the charts. And so for today, the trade that I took was on NAS. However, I do want to provide a quick breakdown for both pairs. And the reason why is because if you're not familiar with my channel, this is how I trade. I have both currency pairs up together at the same time, simply because these pairs generally move in tandem. And there's some setups where like a setup is delivering on both pairs, but sometimes it's better to take the setup on one pair as opposed to the other. And this is one of these examples where I can explain to you the logic as far as why I was only looking at NAS setups for today and not S&P. So jumping right in, we want to first start with our daily bias, right? This is the part I used to skip many months ago, and that is, in my opinion, that's my belief as to why I never got consistent results in the marketplace, why I was just taking so many losses because I was not fully aware of the direction that price was heading in. I was taking many trades against the daily bias or against the direction, and it explained why I was getting stopped out so often. Whereas now that I'm actually trading in alignment with daily bias, my win rate has been much higher, my strike rate is a lot higher, and generally trading has been a much smoother ride all around. So beginning with both pairs, right? Both pairs I am still bearish. My bias is still bearish on both pairs. So question is why, right? Here, this push here, right? When this candle formed on January 27th, this aggressive bearish candle, this candle was the candle that traded through and cleared this swing low right here. Um, Price came down, it took out this low, and so that basically um, pushed price into a bearish trend. And this major space here, some people think is an error with price. No, this is a new week opening gap that the market itself actually gapped. So this gap here essentially created like an imbalance or fair value gap, um, that is holding price there, right? So price made this push down, and price never showed us that it broke the gap and wants to go higher and clear these highs. It hasn't done that. So because of that, I'm still bearish, even though I understand that I'm seeing a lot of bullish candles, but the bullish candles are digging into the fair value gap. It hasn't broke past the fair value gap or pushed past these highs. If price came up, blasted through the fair value gap and past these highs, then my bias would switch to bullish. And that's how you need to approach daily bias, because previously I didn't fully understand daily bias, and now I understand that having a daily bias means that for me, I wait until price gives me a reason to have a bias, and I stick with that bias until price makes me choose otherwise, right? So there's no sign here that's telling me that price wants to be bullish. So even if I'm seeing all these bullish days, I'm still bearish on price. Same here, it looks a lot cleaner on the S&P, but same here with the S&P, right? This aggressive candle on January 27th came down and cleared this swing low right here, breaking structure to the downside. And then as you can see here, there was a gap that was left, this gap right here. And if we extend that gap out in time, you're seeing the price wicked it 1, 2, 3, 4, 5. So the price wicked it 5 times. So this is showing that this gap right now is currently holding, right? And of course, if price ever blasts through the gap and then clears this high and pushes up, then of course my bias would change to be bullish. But as of right now, I still have a bearish bias. I'm approaching the market with a bearish bias, so that means I'm only looking for sells. So now if we go on to the 15-minute time frame, right, we'll mark out the liquidity pools. So once again, guys, I'm going to start with the S&P to show you why I didn't like the S&P and why I was focused on the NAS. So I'll just full screen the S&P first so you guys can see what's going on here. So first and foremost, I want to mark the 830 candle, um, and then look to the left of it. So this point right here is when 830 opens. So if we just put a vertical line right here. So to left the vertical line was the most recent high on the 15-minute. Clear as day, this high right here, right? We can all agree because from this point to the left, this is the highest high. Well, the most recent high. So this is effectively my buy side liquidity. And the other thing I noticed here, of course, you have a big fair value gap. Fair value gap, it was tapped into a little bit, but you still have a big gap. But once I also noticed these smooth lows right here, right? Where you're seeing 3 lows, tap, tap, tap. So I put that purple. Why? Because if I'm looking to take sells, then I'm anticipating price to dig into buy side liquidity to then take it lower to then take it to a target. So because I seen these smooth lows, I seen that as being one of my potential targets to the downside, right? It just looks too clean for that to be done by accident. Wink, wink, right? So now we have that. So essentially what I want to see is after 9:30, I want 9:30 to pretty much make the high of the session and then break down lower to take a trade down ideally to these lows, which of course you have liquidity built up. Why? Because support and resistance traders see this as support, right? 3 taps. So a lot of people entered buy positions here with their stop loss under. So it's a lot of liquidity down there. However, I immediately noticed that today was going to be a strange trading day. And the reason why I say that is because if you notice this entire move right here, right, this whole move up here, you notice that there's not really any fair value gaps that were left, right? Like any gaps that were formed were pretty much closed, right? Like this gap here was closed. Um, this little gap here got closed. You have this gap here that got closed, right? Like these wicks are closing a lot of the gaps, and I do want to see targets. I want to see reason for price to want to go lower, right? The only obvious gaps I'm seeing is a gap right here, and then of course like a gap here. But I would want to see, like, of course these lows are all liquidity, right? But having gaps as well is also more incentive for price to want to go down as targets. So I already felt that today was going to be an interesting trading day, right? So that's what I noticed up until this point. So now I'll just keep fast forwarding until 9:30. Right, we'll see the 9:30 candle, and then boom, 9:30 candle. As soon as 9:30 candle open, you see an aggressive rally down, which is something we generally don't want to see. And the reason for that is because we want to see price push up. So then, when if price breaks down and give us a break of structure, we can then take a sell, and then during our way down, we can use these sell side liquidity targets as targets, right? So we want to give price maximum number of reasons to want to go lower. But if price is going lower and taking out liquidity to begin with, that's already like not a good sign, right? So we have an aggressive candle here and then another aggressive candle, which this push here already cleared out this low. So just imagine all of these being targets, but then when price opens up, it's going down and it's already clearing liquidity. That's what I don't want to see. When I see something like that, I become less interested in trading the pair because I want these targets down here, right? Especially like these lows and this low, I want it to stay intact because then there's reason for price to want to go down. If price is going down, clearing it to then go back up and then break structure again lower, it's it's less likely for price to want to go lower. So I'm already seeing this and I'm already losing interest in trading the S&P, right? As you can see, price came down, made another push, and then you start seeing that price is going up and up and up. But long story short, price, you know, kind of like never gives us any sort of push, right? So I would stick to the 5 minutes, and then here on this 5 minute candle, we seen a bearish candle after price came up and cleared this high, but there was nothing here, and pretty much price didn't give us anything. There was no break structure, there was nothing. So there was nothing to do, in my opinion, on this day for the S&P, and I was not interested in trading it because price came down and started clearing sell side liquidity, which I did not like. Right, so I pretty much ignored the S&P for the day. Now let's talk about the NAS100. So I'm going to explain to you why I took a trade on this day. So same logic here, right? We're going to rewind it to 8:30. So 8:30, we're going to put a vertical candle. 8:30. That's the vertical candle right here at the beginning of 8:30. So we'll look to the left to see if there's any high that's past the high of this candle right here. So we do see it, and it's right here. So here we mark our buy side liquidity, and then the same thing that happened with S&P, the same thing that happens here. I notice a lot of smooth, like a very smooth low right here. And so this is what I mean. There's people who be out there who say, you know, price moves randomly. It's just the bulls and bears fighting to move price. Guys, bulls and bears will not leave price like this. This does not happen by accident. Like these lows are perfect. They're literally perfect. It's not done by accident. It's not done by buying and selling pressure. This is done on purpose. This is manipulation. This is price creating orders. It's getting people to jump in and buy position and put their stop loss under here. So that is literally liquidity engineering. So when I see this, when I see smooth lows like this, which of course support and resistance traders see that as support, I see that as the market potentially creating a downside target so that if we're bearish on the larger time frame, right, and price takes buy side liquidity and push down, that would be a final target for me to close, the final TP pretty much. So that's a good sign, seeing that as a potential target. But of course, the same logic I had in the previous, like with S&P, right? A lot of the fair value gaps got closed by these wicks, right? All these fair value gaps that previously existed, they're being closed by the wicks. So the only fair value gaps that I'm actually seeing is this gap right here, right? And then you have this gap right here, right? These are literally the only two fair value gaps that I'm seeing in the marketplace. So the same logic follows here. We are bearish, so we're looking for this buy side liquidity to get snagged, and then we want to take price lower. So I'm just gonna stay in the 5 minute time frame. I'm just gonna wait for 9:30. So of course, in a perfect setting, I want after 9:30 push to make the high of the session and snag this liquidity, and then push price lower. So here, this is the 9:30 open. So of course, not ideal to see a bearish candle, especially with the candle, tapping into the the fair value gap, right? It closed the gap right there, and then it also closed this gap as well. So not ideal, but so far this is at least still better than the S&P because no liquidity was actually taken. Gaps were closed, but like no actual lows and things like that were taken. So just watching price, and then boom, with this candle. So already you guys can see why this pair is already more desirable to trade than the S&P. So I'm watching both simultaneously as price is unfolding, and I seen the S&P and I just thought to myself, that would be a lot worse to trade than NAS. So the entire time on the session, I was just focused on NAS, right? So have a push up here, and then boom, the liquidity gets taken. So if you want, you can label it. I know a lot of people like to label things, right? So boom, liquidity got taken, and then we see this aggressive bearish candle. So immediately once this happens, I'm still in the 5 minute time frame, but once I see this candle close here, that's when I dive into the smaller time frames to see, is there a break of structure? Is there a fair value gap that I can take to take price lower, right? So I start digging in to see if I find some evidence. So in the 4 minute time frame, we don't have anything just yet because the structure point is right here. this is the swing low that I would need to, or right swing, yeah, this is the swing that I would need to be taken out, right? The other swing low. I would need to price go down and then clear this low so that it can be considered breaker structure. So no breaker structure just yet on the 4 minute time frame. Jump in a 3 minute time frame. Um, the same idea here. This is the swing low that we need to get taken out. I know it's hard to see. It looks almost like equal lows, but I looked at the numbers at the top right here, and this is technically a swing low by 1 pipette. So price we need to come down here and take that out for us to consider something. On 2 minute time frame, the most recent swing low prior to the high is this low right here. So price we need to come down and take out that swing low. Hasn't done so yet. And then on 1 minute time frame, same idea. Price would need to come take out this swing low and leave a gap. So nothing really happened yet. So I'll watch another 5 minute time frame, and then boom, we have a bullish candle. So I'm starting to see a lot of the gaps close. So it's reducing my interest. And me personally, because there was a bearish candle 5 minute and then a bullish candle 5 minute, I wouldn't have taken a trade. Um, but even then, if we cycle through all the time frames, you could see here on the 2 minute time frame, this swing low was in fact broken through, right? Trade through. So price, three bearish candles blasted through this low. And was there a fair value gap left within this range up here, right? Is there a gap? Yes. However, this gap is very, very tiny. So this is the gap here. So technically, right, this would fit your confirmations for a trade. However, this is a pretty decent sized move down for a gap to be that tiny. So me personally, I didn't take the trade because I just felt that the gap was like super tiny. That's one. Two, um, I felt, like this 5 minute candle is forming bullish. So that's less incentive for me to want to take it. And three is it was just a tiny gap. So honestly, if there were a setup that played out just like this and the gap was that tiny, you would go in with half risk. Like I wouldn't go in full risk because you ideally you want to find a fair value gap that is noticeable, right? Like a big fair value gap because the bigger the fair value gap, the more likely it is to actually hold, right? So I've seen this. So me personally, I didn't take the trade, and you guys are gonna see that eventually it worked out because price ended up pushing higher. So this is just a common example where if you had taken this trade right here for a sell, of course, obviously you would have been stopped out. But it wouldn't have been a bad trade per se. Like it would have been a trade where like all your confirmations were met, right? You had a break of structure, and then the candle that formed the gap and the next candle are both bearish, right? So could have technically taken a trade here. I would have taken it with reduced risk if I took it, but I didn't, right? Nothing happened. So price kept pushing higher. So of course, I'm still stalking price to see if it's gonna give me something because I'm trading until 11 o'clock, and right now price is 10:20. Right, we're just seeing bullish candle, bullish candle, bullish candle, and then price right now is 10:45. So the session is almost wrapping up. But remember, I'm here until um 11. So here, this is the candle that formed 10:50 to 10:55. So bearish candle. So now I'm dropping into lower time frames to see if I'm finding anything. So on a 2 minute, this is a much smaller move, right? As you can see, price kept going up and up and up. So this high was formed, and the even this high and this high, obviously the last push up that formed, um, this was the low that was formed, and as you can see, price came down, cleared this low, and left a tiny gap. So with this tiny fair value gap, of course, this is just as tiny as the last one, but this is a much smaller move. So I guess this tiny gap is a little bit more proportionate with this move because look how much bigger these candles are, how much more aggressive the move was, and it only left pretty much a gap the same size, but this move is much smaller. So this is like a much more reasonable size gap, if that makes sense, like proportionate to the move. So I seen this and I said, you know what? I'll just jump in the trade, but I jumped in with much reduced risk. Like I probably jumped in with a quarter of my normal risk because of the move being such a small move, well, such a small gap, like a small movement in price. So because this was a tiny break of structure, I had very um, conservative targets, right? I didn't want to immediately just try to put my target, you know, all the way down here. I didn't put my target all the way down here expecting price to go down and make, a 1 to 11 risk to reward, because this is only such a small move that price only wants to move so much, right? So I didn't do something like this, right? I'm very reasonable, guys. I'm very reasonable with my expectations. So rather than doing that, so I take a short, of course, stop loss above the high. That's where I'm most comfortable putting my stop loss. And for me, I put my final target under this low. Why is that, right? Because first off, we have immediate like structure, like you're seeing like price sort of slowly creep up, and then you're also seeing a massive gap in price that was left here. So to me, this is low hanging fruit because as I showed you guys previously that you're seeing a lot of the gaps were already closed. Like pretty much all the fair value gaps are all closed, and this appears to be the only like open fair value gap that exists in all of the price action today, right? So that would be a legitimate target. And this is at least like halfway through this major move. So that's pretty much what I'm looking at. Of course, when I'm taking like a sell, or whatever position I'm entering, I'm looking for opposing highs and lows, which as you can see also, right, it works out because also this is a low, this is a low, right? Like these are also legitimate targets, and then clear as day, this is a gap. So I'm expecting price to want to magnetize towards that level. So this move trips me in, right? And then I'm just watching price. The mistake that I made, I moved my stop loss to break even too early because you can see, right, price tapped into the fair value gap once here, and then another time here, and then another time here. So you have several chances to enter in for a sell. The mistake that I made was that I moved my stop loss to break even because I'm watching this low. This was the low that was formed, prior to the entry, and I'm want price to go under that. The mistake that I made was that I moved my stop loss to break even after price wicked under, like with this candle here. I moved my stop loss to break even when what I should have done, I should have waited until price closed under this level, right? So price wicked it, as you can see, but I should have waited until price closed under, because the closure, in my opinion, the closure is what usually signals that price wants to continue heading in that direction. And generally, from what I've seen from my many months and years of trading these pairs, that the closure under the low is generally when it's most safe for you to move your stop loss, because that is when price typically continues in that direction. And if price goes back and takes out, like I say, you move your stop loss to break even, if price eventually goes back and takes you out, then usually it's because the price actually reversed against you, and it's less common for price to want to go back up at the fair value gap entry after it closed under. So in this case, I rolled my stop loss to break even once I seen this little push under here. Now, and because I was trading with such little risk, I didn't take a partial. Usually I would take a partial here. I didn't. And then as you can see, price came back up, and then boom, it took me out at break even. But I'm gonna keep letting the trade play out so you guys can see. So here with this candle right here, if I just waited an extra, what, an extra 5 6 minutes with this move down here with price closing here, right, finally closed on this level, now that's when I should have rolled my stop loss to break even. And then as you can see after that, right, price continues. And me personally, I was looking to take a partial at this level here. There's nothing special about this level in particular, right? Because there's no gap, there's no nothing, and I personally don't really focus too much on like order blocks and all these other advanced concepts. I personally would have just taken a partial. I would have closed out at least 50% of my position, simply because this line here looks like the midpoint from my entry to my final target. This is pretty much the and the mid level, so I would have taken at the bare minimum 50% of my position off, right? Especially since I had a small position. But because I moved my stop loss to break even, I got taken out at break even. But, you know, had I been a little more patient and let price play out, once the price closed under here, then I would have taken half of the position there. And then, as you guys will imagine, price doesn't go back to the entry, right? Which is what I've been explaining to you guys. And then, right, even if you hear that price clearly does not ever tap your entry, and then it goes in and fills in that fair value gap, which would have been my final target for a 1 to 2.86. But clearly, I would have taken partials, so it probably would have been closer to a 1 to 2 risk to reward on this setup. But that's pretty much what happens there. And then, we let the rest play out. You know, Nothing else is important, right? You see price eventually does come up, so you would have gotten stopped out. So this is what I mean, right? It's like you want to go after the low hanging fruit, you want to go after the easy targets. So had this trade, had I waited a couple more minutes before rolling my stop loss, this could have ended up being a win for the day, even in these nasty, weird market conditions where price is moving funny. But I wanted to do this setup for you guys to show you, and this is where price is currently at right now. So I want to do this breakdown to show you guys a trade that I took. Now, once again, of course, I got out at break even because price came up and hit me right here at my entry point before actually, breaking down and going lower um, to then hit my final target. But this is a setup that I learned something today, a reminder to be a little more patient. And, you don't have to roll your stop loss. The second price goes on the low, you want to make sure price actually closes below there because then that's more of a certainty that price wants to continue moving down. Um, so you live and you learn, but hopefully you guys found something useful. Hopefully you learned something from this example. This is just showing you how you can be a consistently profitable trader. Being consistently profitable does not mean winning every time, does not mean having 100% win rate because no trader has that. It just means making the right calls and the right decisions. And as you guys can see, at least from the examples that I've been showing, my win rate has increased tremendously, right? I'm more picky with the trades that I take and what I choose. And if there's a setup that's, that fits my confirmation but is decent, I'll go in with reduced risk. And in this case, had I been a little more patient for a couple more minutes, I would have walked away with some profits for the day. Um, because this minor win is still a win. It still increases your account balance. So had I been a little more strict with my rules and, you know, been a little more patient, that could have resulted in potentially a 1 to 2 with the no, reduced risk trade and a win. Um, so as you guys can see, also from this setup here, I was only looking for sells because as I showcased on the daily time frame, I am bearish. That is my bias, so I'm only looking for sells. I'm not looking for buys. The previous version of me, um, wouldn't have taken that into consideration. So I would have just been taking whatever trade in whatever direction and having less confidence and having a much lesser win rate, right? Essentially, my uh my results was all over the place because I didn't factor it in. But now, as you can see, right, how you can be a lot more consistent as a trader. And this is another great example because even if you taken a trade here, right, this is the trade that I skipped with this tiny fair value gap, and you taking a loss here, this re-entry could have potentially made you, you know, gain the money that you lost with this first trade, and you probably would have walked away with some profit as well, right? So this is what I mean. You don't have to be perfect, and even these small wins can end up still being wins to help your account grow. So once again, break even trade for me, but hopefully you found some useful information from this video. Hopefully you were able to learn something, and hopefully you begin seeing price for what it actually is. That price is just going after liquidity and gaps in the marketplace. And you're seeing as soon as price came down and tapped this gap, it sort of hovered around there, and then price started like going back the other direction. So it's showing that these areas are sensitive areas, and it's showing you that this is how price move for liquidity and for gaps. So that's pretty much my trading strategy. That is the recap for today, Monday, February 10th. Um, And yeah, if on Friday a setup presents itself and I take something, then I'll also do a recap for Friday as well. But this right here is the recap for Monday, February 10th. Enjoy the video, do leave a like and subscribe. And turn on post notifications as I will be posting more recap videos just to teach you guys, to show you guys what it's like to trade and the logic behind trading so you guys can see how powerful this strategy is and why, if you've been looking for a strategy, why you should adopt this strategy here. So, see you guys, it's Joel, and I'm out. See you guys for the next video.